I can't tell if it started streaming or not. Oh, now maybe I'm live. Oh my gosh, was this ever the stupidest setup? Come on, YouTube. $100 bajillion and this sucks so bad. All right, hang on. Now I got to figure out a way to pop the chat. Almost there. It's taken me 20 minutes to get this far, guys. Okay, so I gotta pop the chat out. Okay, sorry. You know what? Let me just run the intro. So anyways, good morning. Good to see you. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Guten Morgen. Good to see you. How are you doing? Comment allez-vous? Today we got Bank of Canada, don't we? So we'll go through the calendar just to see what's up for today. We'll get that volatility. We got ECB tomorrow, all that kind of stuff. Lots of interesting things happening. Hey, if the dollar's weak today, that means risk on. That's interesting, right? So anyways, why don't we go through the charts? We'll do gold and oil and Bitcoin. We'll do yen pairs, dollar pairs, Swissy pairs, and then I'll take requests. What do you stink? Smell like a plan? By the way, my name is Wayne McDonald. Nice to meet you. I'm a currency trader. Been doing this a very long time. Been setting up trades in front of people since 2004. Very, very, very interesting, huh? That's a long time. So I've been doing this for a while. So I highly recommend you ask questions, get involved, but treat me and the other people in the chat, your fellow traders, with dignity and respect. Okay? Or you'll get booted. Pretty simple. Please like, please subscribe, please leave comments. I do read your comments. Thank you very much. It pops up on my phone. Stephen left a comment and said, "Thanks, Wayne." And I think to myself, that's Stephen's such a nice guy. Also, it tells YouTube this is quality content and should be promoted. So that's good for our community as well. Nice. So I'm hoping these webinars are helping you succeed as a currency trader, learn technical and fundamental analysis and trade planning. If so, please visit tradersway.com, the sponsor of the webinar. They bring it into your life, so you need to pay it back by visiting tradersway.com, open up a demo account, and download MT4, make some trades. Check out the execution speed, check out the amazing swaps, check out the spreads. You'll be very pleasantly surprised. Tradersway.com. Thank you, TW! Forex.Today. All right. So you can go to today. Today is going to be the day that I'm going to throw it back to you. By now, you should have. Canada, 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 Canada. Oh, Canada. Yeah. Our home and native land. Nice. So it's all about the rates. Gonna change it. So anyways, if they cut interest rates, that'll be very interesting. You don't really know? I asked you a couple of days ago to visit the Bank of Canada website and see if they're telling you what they want to do. So this is what's going to happen very soon. First, CPI comes out at 8:30, but it's going to be overshadowed by the interest rate, okay? Or by the interest rate decision. Now, these are tied together. So, for example, if interest rates are falling, Canada will want to increase the money supply and create inflation. If inflation is rising, the Bank of Canada will want to reduce the money supply to address inflation. So they are related, okay? But the inflation itself isn't what changes the value of a currency per se. It's the monetary policy that addresses said inflation, all right? So anyways, this overshadows that, but they are related. Anything else going on? Oh yeah, Aussie jobs, right? Aussie jobs this Asia. I love the Aussie jobs report. I've said it 100 million times, but let me say it again. It's a scalp. If you can pick up 75 pips on it, do it. Walk away with the 75 pips in your pocket. Because often what I see is a move and 100% retracement. Which means you might be up 75 pips. You might jam your stop at break even and say, oh man, I got this. This is going to be a move that lasts 3 weeks. I'm going to make 1,000 pips. And you come back the next morning and you are out with nothing to show for it. Yeah, Peter. It's called a carrying cost. Okay? Okay? But great question. It's not actually true, but that's how you look at it. Yeah. Oh, yeah. Steven says, saw the YouTube story. Like, I don't think very many people did. I still don't really know how to use it. I was thinking about maybe answering your questions. Like, maybe I can get you to post questions somewhere and then I respond with video. Yeah. But I thought it would go out to all my subscribers so anyone that was thinking about logging in to watch a webinar that day and forgot that it's a holiday in the United States and the markets were closed, they're probably sitting around like, where's Wayne? Where's Wayne? Where's Wayne? So I'm like, oh, well, I'll do this. Okay, so I did my first story, posted up there, and of course it doesn't alert anybody, so like 4 people saw it. Yeah, so I'm like, what's the point then, right? So I still don't get the point. So anyways, but we'll figure something out with that funny YouTube stuff. Okay, my phone is going bananas. Oh, good. Great. Why is it that the person you're always trying to get a hold of for days and days and days and days responds to you in the middle of your webinar? Anyways. Okay. Let's review this. Do I have my drawing tool? I do. Do you guys remember yesterday? I know I did a lot of babbling, but what was the technical analysis yesterday? Part of the day trading scenario I was talking about. Oh yeah, and then I want to talk about the day trading stuff. Hang on. And I keep clicking pen, but it's not. What if I click arrow? No? Hey, hang on. My drawing tool is brain farting. Watch this. Pen, no pen. Arrow, no arrow. All right, so hang on. Hang on, Bubba. One of those days, huh? Today is going to be the day. Anyways, while I'm trying to get this going, May I send you a survey about day trading? I'd like to know your needs, your wants and your needs, your challenges, your desires in regards to your ability to day trade profitably. So I've decided instead of the original idea was I said to my swing traders, I'm like, hey, I should just teach you how to day trade using similar techniques. And they're like, oh, that'd be great. And I'm like, you know what? I should just do it, 3-4 days in a row with you guys. And they're like, that's great. And then I keep thinking like, well, then I should do it, put together some slides and make it more formal. And then it gets bigger and bigger. And now I'm thinking I want to do a just straight up day trading course. And I want to know like where you struggle and all that kind of stuff, right? And how more importantly how I can help. So I'd like to create a survey, and you can go through and tell me the challenges and all that kind of stuff. The theme from Shaft is your. I don't even know what Shaft is. Sorry. Okay, where's my drawing tool? Okay, finally it popped up. So if I put together a survey asking you like, what do you want from day trading? How much time do you have for day trading? What time do you do trading? Have you tried day trading before? What has worked for you? What doesn't work for you? What do you think your strengths are? What do you think your weaknesses are for day trading? All that kind of stuff, and I'd like to address it. But anyways, let's go back to this. I finally got my drawing tool. Okay. Yesterday, let me not do it this way. Yesterday, I drew these 3 lines for you. Do you remember this? This one, and then this one was way out there, but it was plausible. But what we had done yesterday is I said, between these lines, on a 5-minute chart, you should look for any kind of reversal pattern you want. And the only thing you're allowed to do is sell. And I said, this is a form of day trading. How many people remember all of that? And then I went on and did some babbling about psychology and stuff like that. You guys remember? Nice little day trade. And what do you think now? And remember, I said all of this was based on today. Even though it's a Tuesday, I had planned everything based on today. But yesterday, right? And the idea was, right, here and here creates a zone for selling. Even though it had been up for, 8 hours straight, the idea was down, 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 up, up, sell, down, 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 and that's your day trade. Cool, right? Tova, don't put it here. I'm going to create some sort of survey, and you can tell me there. Okay? So my idea, guys, is to do the course as part of the swing trading group. So if you're in the swing trading group, you get it for no additional cost. If you're not in the swing trading group, you have to join the swing trading group, and then you get the swing trading course and you get the day trading course, and then I'll pull the day trading out and put it over there as something separate. Okay, cool. La 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 la. That way I don't have to create new infrastructure and all that kind of stuff. All right. La, 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 la. All right, so let's go through commodities first, okay? WT, my, oh my. Okay? WTI, my, oh my. Okay? We're up and up on geopolitical risk and pachow. Okay? Do professional traders, do institutional energy traders, do oil traders use pivot points? This is where you answer. Based on your observations, not a book, not a mentor or coach like me, not based on what some dude said on the television in his interview. Based on your market observations, do institutional oil traders and investors use pivot points? I don't know what your opinion is, but what does that tell you? That even with geopolitical risk, two countries nearly going to war, assassinations, right? Black ops, and boom. Right? Isn't that amazing? Weekly M4, monthly M4. Huh. Whale oil B, MR fish. Okay? So once again, I don't know what your opinion is. I'm trying for you to learn. Not to memorize. What's Wayne's rules of engagement? What's Wayne's thing? Okay? I'm trying to teach you to learn. I want you to just know this. You just know it. You have an opinion. You know it. Your observations tell you something. Okay, great. So let's count this like a double top, okay? And then check. Okay? We said it would fall here or it would fall here. Okay? We did this Thursday and it's Wednesday today. So we did this a week ago. Okay? So let me zoom in a little more. Okay? And based on what we saw back then, so here's a click. Okay. So based on what we saw back then, right, you can see we have a little trap going on here. There's your first sell zone, if you're a bear, of course. And then the second one I had higher up in this area. Okay. I call this move here an Arctic turtle. If you've been with me a long time, you know what I'm talking about. But nonetheless, plan A for bears, and plan B for bears, based on what we knew back then. Now, things changed the next day and things moved. But nonetheless, I want you to think about this. If you were a bear, those are the ways you would have set it up. What would have been important? This would have been important. This would have been important. Okay? How about moving averages on the higher time frame? So you know this on a 4-hour is a 55. Huh? So what does this tell you? If this is a 4H55, that tells you double bottom. So it tells you down, but no lower low. Not yet, anyways. If it will, just not at the moment. Okay? Does anybody concur that they see that? This is a 4-hour 55. Approximately, right? That's why it's there. Let's do some math. This is a 200 EMA divided by 4 is a 50 EMA. So let's just call it the 55 EMA. You see what I mean? That's why the math works in my setup. So anyways, this 200 is also the 4 hour. This is a 200 on a 1 hour, is the 4H55. And when the 4H55 is in control, you're thinking double bottom. This is basic straight out of my book from 13 years ago. Borrowing, right? The worst book, not the worst Forex book, not the worst trading book, the worst book ever written, as indicated by one of the reviewers. The worst book written of all time. And I said, well, that's interesting. I'm not a professional writer, but I know how to trade. So my writing might suck, but that's in the book. This predicts, right? So now it'll be interesting. It doesn't mean it can't make a lower low. What it's saying is it lost a lot of steam. And you shouldn't expect it to make a lower low. But what you could do is wait for a breakout pullback, and we call that a reset, but you're not expecting it. Okay? If the 4 hour 21 was involved as resistance, then you would expect a lower low. You see what I mean? Oh, right on, Luca. Is it the worst book ever written? Now, the editing sucks, but that's Wiley Publishing. That's not me. All right. Cool, right? So anyways, that's what that says. It might make a lower low, but you wouldn't expect it under these conditions. Okay? That's interesting, right? Now, what if you're a bull? Well, you can try to do the double bottom play, or you could wait for the higher high, higher low, which is more conservative, but over the course of a year or so, you wouldn't have very many trades, but most of your trades would likely be profitable. So here's the most conservative way to trade this if you're a bull. Okay? Treat it as a bottom, and then if it makes a higher high, then predict the lower low. And then buy the lower low, which then predicts a higher high, right? But you're trying to create a reversal, and it's the worst way of doing it. I hate creating reversals. I'm a trend trader, right? So this type of stuff as a trend trader is scary. But it went up based on geopolitical risk, and once we realized there's no threat, it came down. So think of it as overbought, right? Overpriced, and that's the consequence of overpricing. Okay? Also, swing traders know, right? This is an OOP, which predicts this, and this predicts this. Okay? So cool, right? So when I finally do put the day trading program together, you'll get the day trading program and the swing trading program, and you would know all of that. How cool is that? Gorgeous! Okay? So now what do you want to do? Well, once again, if you're a bull, you kind of have to test your patience here, because what you're asking for, let me tell you this, what you're asking for is eventually this. Okay? Well, here's the interesting thing. There's a difference between technical analysis and fundamental analysis, right? Now, the fundamental analysis says there's a reason behind pricing. Technical analysis is the timing, right, of buying and selling, as well as indicators that will tell you if the price is high relative to a norm or low relative to some sort of norm, right? That's all it tells you. But it doesn't tell you if it should go up. It's just telling you it has been going up, and there's a certain rate of change, and there's a certain slope, and a certain mean, and a certain deviation, and you know, and a certain oscillation. So you're just using different tools to measure whether it's overbought or oversold, and if it's a good time to buy now or not a good time to buy now, right? So let me ask you something. Okay, if the technical analysis tells us this, right, what you see here, do we have the fundamentals that drive oil to 66 bucks? Do the fundamentals exist for that to happen? Okay, and that's going to be your answer. Pro Trader says yes. Well, Iran attack. I don't know if you mean the Americans attacking Iran, but Iran's oil isn't in the market anyways. So it's already removed from the market. The only, Iranian oil in the market is probably being sold to China at, at $25 a barrel. Okay. Now, what if Iran attacks Iraq? Iraq is something like, what was it, 7% of the oil supply, global oil supply? Okay. An OPEC move, yeah, all that kind of stuff. Demand is generally constant. Okay. Oil will be needed by China tomorrow, just about the same as today. America, if it needs oil today, it's going to need about the same amount of tomorrow. You see what I mean? Peter, Europeans use gas and it comes from Russia. Okay? So anyways, I want you to think about this. What is the reasoning? If demand is constant, okay? If it's not a demand issue, right, then it has to be a supply issue. Okay, and we're going to need less supply to push this up. Okay. What do you think? Andrea brings up a good point. The other thing, if it's not a supply shock of some sort, okay, then it would have to be a falling dollar. Okay. And what creates a falling dollar? A good U.S. economy or a bad U.S. economy? Thank you, Stephen. Canadian CPI 2.2. Great. What weakens the US dollar, guys? If it's not going to be a supply shock, then we're going to need something else. Okay? Then we're going to need a good US economy. Okay? And we're going to need risk on. And what does that do to the demand side of the equation for oil? The weakening dollar is a pricing issue, right? So if a dollar buys less today than it did before, then you're going to have to spend more dollars to get the same amount of oil. That's why, what is it, a 48 liter gallon drum, or is it 50-gallon drum? Whatever. A barrel of oil is a barrel of oil, right? So the barrel of oil never changes, but its value goes up and down. Well, it's either because it's scarcity and someone will just be willing to pay more than the other people, right? Or the value of the currency being exchanged for the oil is worth less, so now you have to just simply spend more to get the same amount of oil, okay? So with a weakening dollar, you're going to have to just pay more dollars for the same barrel of oil, because the dollar being weaker than the day before, the week before, the month before, the year before, just means you just need to spend more. Okay? The oil hasn't changed. Now, if it's weak dollar and risk on, that means there's also the demand is likely going up. Okay? Because now money is leaving the US. So it's not just inflation. Like in a poor country, the currency weakens because they've just printed so much of it, it's worthless, right? Now, this is different. There's a good US economy, and investors are investing globally. They're putting money into China, spurring the Chinese economy. They're putting money into Australia, spurring, right, the Australian economy. They're planting seeds around the world. Do you understand, like, the difference there? They're putting money to work. They're deploying capital, right? Which then increases the demand for labor and capital, right? Now you have productivity in whatever country. And then you have economic activity in that country, and now they're going to need more energy. Demand side equation. So the weaker dollar plus the implied increase in future demand for the energy, because this money is acting like fertilizer. You're just simply going to have a better yield. Your crop is going to produce more, okay? The global crop, global productivity, okay? So that pushes up the long term, right? The short term, the weak dollar, you just have to spend more dollars. The longer term is increased future demand from an increase in economic activity. Cool, right? But that's a heck of a tall order right now. But if that's you, then you got this price here and you got this price here. So let's just call it between 57 and 58. You're looking to get long and strong. Sort of, Andrea. It's a good question too. Yeah, it's more like there are turns. Okay? There are turns. Every asset class has a turn. Because what happens is you buy real estate cheap, and the downturn, or you should, right? And now if you want to buy real estate, you have to pay too much for it. So then you might say, well, what else can I buy with my money? You already got real estate, but you keep making money, so now what are you going to do? Well, I'm going to buy something else. So you look for a good deal somewhere else, and it's not real estate this time. Maybe it's gold, and then gold goes too high. And then you're like, well, I already got gold, and I don't want to pay this much for it. Now what should I do with my money? And you go find something else, right? So gold is very often a safe haven, especially when the US dollar is weakening, for very similar reasons to WTI going up. But you're always looking for a deal. And this is the part that people miss, right? Like, I look at the world, and by the way, I could be completely wrong, right? I love that. I can be wrong, right? Right? No. I look at the world like it works like this, like sprockets and cogs working together. It's a Newtonian view of global economics. There's a reason and a logic for everything, right? So that's why I say there are turns. Money has to be deployed, and then prices go too high, so you go somewhere else, look for a good deal there, and then finally those prices get too high, so you go look for another deal, and another deal, and another deal, and another deal. Okay? And dumb money always buys high. Why? Because you're like, wow, look at that. Real estate is up 50%. I guess I should buy it now. But if you're a smart, intelligent, informed investor or trader, you need people like that to pay too much for what you bought years ago. They're your liquidity event. Oh, that's funny, Max. Steele says, real estate will tank big time. Don't say that. There's just a timing for everything, that's all. Try not to get too much. You're too loud. It's too loud. It'll have its time. There's just time for everything, right? So don't worry about it. Don't worry about the crash, the sky's falling, and all that kind of stuff. All right, so anyways, if you did want to be a bull there, you're putting all of that into your planning. So in here, you're going to need to see something like this, right? Oh, I didn't say you were wrong. I'm just saying it's dangerous to be so that. You just analyze it. It will come down absolutely. Okay? Okay. So anyways, that's how you do that. If pricing that in. Of course, if you're a bear, back up into here is going to be very interesting, right? So you're probably going to be selling around $60 a barrel and defend that, right? Are you a bear? If so, okay, 1, if you're a bear, 2, sell high at, okay, 3, at resistance. Whatever. 4, with the reversal pattern. 5, and that's going to be about $60 a barrel. About. Notice I'm not saying sell at $60 a barrel. What I'm saying is you need to sell high. If you're already bear, you need to sell high. So we're here, that means up. And then when you get near $60 a barrel, which is currently next month's central pivot point, then, right, so we'll count that as resistance. Then you have to look for a reversal pattern on maybe a 5-minute chart, right? Or a 15-minute chart. And it looks like this. And now you're short, probably $59.95, and you're taking this downtown all the way back to $53. Okay? That's how you do it. Oops. Yeah, Javier, but everyone's opinion's welcome as long as it's not destructive. I like people with opinions, right? If it's done properly, because a bias is only opinion. So if you're like, the real estate market's going to crash, well, you have at least a 33% chance of being right. 1, the real estate market crashes. 2, it just hovers. 3, it goes up and up and up and up and up. Okay? Cool. But if you're trading it in such a way that you can determine or confirm your opinion, you're going to do well, even if it only lasts short term. Maybe in real estate, we're talking, you know, short term might be a year, right? But you're like, oh, he made money this year, and then maybe things pop up. Okay? But I would say differently, I guess. I would say we're in a mature part of the uh, real estate cycle, and I know how to analyze when to get out of a real estate investment and then when to get back into a real estate investment. And it has nothing to do with pricing. Okay? Yeah. Well, right, Andrea? Yeah. Crash is a pretty, see, I don't like the wording like crash and stuff like that. But I could write a paper, like you're saying, it's hard to put in 200 words. But I could write a paper like, I don't know if you guys want to get into that. But I thought I would do a real estate course for you guys one day, but I'm just so, but whatever. Let's get off of this. I'm going to get Max mad at me. All right, let's do Bitcoin. Okay, you see those guys? I call them step ups, right? So it's pretty hard to sell something that's rising. Well, it's not hard. It's dangerous to sell something that's rising. So you had a falling market. That's cool. Okay. It ended with the double bottom, triple bottom, higher high. We call that a breakout. I teach you to let it come all the way back to the scene of the crime and you buy it. Up, 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 back to, right, down, down, roll reversal, right? And as far as you're concerned, it's probably going to do this over the next couple of weeks. Okay. Oh, I'm not sure if you do, Max. You're a very confusing dude. Oh. Okay. You see what I mean, guys? We can bust out a little further and find out where in the cycle we are. So let's measure this differently. Let's do the math. Okay? So, based on the move since May, price is very much on the high side relative to the mean. Okay? We are one full standard deviation from the mean. Okay? So, if you were a bear, this is very interesting. Typically, price does not move this far from mean, the average. The average price being here. It should be worth about 7K. Here we are sitting at 8,500, right? 8,600. So it's not that it can't go up, but if you're wondering, is this a good place to buy? No, probably is not. So it might revert to the mean. Now notice I'm telling you both the bull and the bearish side. If you're a bull, okay, you can buy this at this price. Oops, I guess I'll do it this way. You can buy it at this price. Totally. You might just ignore this and say, there is a fundamental reason why Bitcoin is so expensive right now, and it will continue to go up. There's a reason. And don't tell me it's because of your MACD. Maybe the dollar is falling, and Bitcoin goes up in terms of dollars. maybe there's an increase of demand. Maybe, I mean, you got to have some sort of reasoning, okay? And therefore, right? Like it's like saying, well, I've been kayaking this river all year. But tomorrow, there's going to be a flood, even though there's never been a flood before. You're like, well, what makes you think that? Then you show somebody that it's raining high in the mountains today, so now tomorrow the river's going to rise. I mean, you got to have a reason, right? Focus says it's the hype. Let's not think that way too. I'm trying to drive you guys to get away from the sky is falling statements. I'm not saying you're wrong, but I want you to think of this as a professional and say, what is the reason for this asset to increase in value higher than what has been seen since May? So we can say we know the average price since May. We can see y equals mx plus b, that the slope is down. And we can see, based on how far price tends to deviate from the mean, we are at an extreme level. See, this is different than like, oh, Bitcoin's a scam. Like, dude, whoa. We're analyzing this. I'm trying to teach you to be an analyst, right? And then how do you trade your opinion? Now you're a trader, right? So we can say we are about one standard deviation from the mean, which means it's pretty expensive to buy. So you better have a very good reason to want to buy it. And you might actually have it. And therefore, it's okay. Now, remember, trends tend to extend because there is logic and reasoning behind it. Many people made money paying too much for a house, flipping it, and earning money. Now they pay too much for the house, right? And then they flip it and they earn money because the stupid house keeps going up in value. But it took a while for people to pay too much. Everyone had to pay too much and they still made money. It's like buying Apple at $1,000 a share and you're like, that's way too much. And then you sell it for $1,200 and you sold it to someone else who paid $1,200. And you're like, oh, you gave it to them. And you're like, oh my God, they paid way too much for it. And then they sell it to someone else for $1,300. Everyone pays too much, right? It just depends on what you originally paid and then what you sold it for. So anyways, there might be a really awesome reason. There might be a huge fundamental move on US dollar, which creates increased demand for Bitcoin, which then turns this from a y equals mx plus b, which is the formula for a slope if you remember your 10th grade algebra. Okay? Right now the slope is down, which means y equals mx plus b, well, it's been falling. The slope is down since May, but now the future isn't related to May, it's related to now. So a triple bottom and maybe a big fundamental move from the Fed creates dollar weakness. Then we might have something that is the birth of an uptrend. So I'm not telling you to be wrong. I'm just telling you, as an analyst, you're paying a lot of money for it. More money than you would have all year. Are you that bullish? Now, the flip side of that is, even if you're a bull, but you think it's going to come down for a while, you can pick up a better price. Or you are a bear, and you're like, yeah, this sucks. We're not going to break 9,000. Here's your logic. We're not going to break 9,000, so we're selling it at 9,000, and we're taking it back to the mean, which is probably 6,500, but let's say certainly 7,000. You are predicting a $2,000 drop in Bitcoin. Notice I didn't say, oh, it's a scam, the world's going to collapse. I'm like, no. Let's just break it down. Let's just analyze it, right? Okay. Let's just analyze it and put together a trade plan. How many people here want to be a bull on Bitcoin, how many people want to be a bear? And don't say, oh, I hate Bitcoin, or just answer it. Is this going up or is this going down? Ruben says technicals will ruin you. Maybe. I look at this and this is trading very technically. Okay, bulls are deciding to buy a dip. Okay, and bears want to sell a rally. Cool. Now, because we think ahead, 88 is February's projected high if you're a bear. Okay? So if you're a bear on this for February, I know we're in the middle of January, but if you're a bear, you're selling way up here at 88. You're already a little bit late, but you can follow it on. You're never too late. You just sell the next rally. But here's your general plan, guys. You said there's no way in hell this is busting through 9,000. You're shorting it, and your target is 654,321. You got that? Minimal target. Minimal. So we can write all this down. And by the way, this is how you're supposed to be trading, right? This is why I'm showing you. Okay, 1. Bearish bias. Cool. 2. Not going above 9,000 bucks. Holy smokes! I don't remember changing the size. That's funny. Why is this Arial 55? And then this is, oops, 99. Wow, amazing. Okay. Okay, now 3. And number 4. Target is 6543.21. It's easy to remember, right? Boom. You got yourself a trade plan, son. Now, if you're a bull, you're not thinking that at all. So you're going to have to pay a little too much, but not this much. So a bull is saying, okay, this trend is wrong. That by the summer, the chart will look like this. Okay? What are you predicting if you're a bull? That Y equals MX plus B will show that the mean is this way. And, right, the slope will go from lower low, lower low, lower low, lower low, lower low, lower low to higher, high, higher, high, higher, high, higher, high. Well, how do you change the slope? Well, it does this. Up, 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 down, down, buy, up, 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 down, down, buy, right? And you're basically doing this now, which is a form of you're just measuring the average between the peaks and valleys, and therefore you get the slope, right? So again, if you were a statistician, you'd be looking at these candles. In fact, you'd probably take the average of every candle and just get a price. So inside these daily candles, you'd say, what was the average price for that day, right? And that's easily done. And you'd get a dot. And you'd have all these dots everywhere, scatter plots, right? And you'd say, okay, well, what's is it generally down or is it generally up? And you always start there, right? And that's why you always start with y equals mx plus b, because then you get the average and a slope to the average average. Does that make sense? So if you're a bull, you're saying, well, this move is over because you have reasoning, and therefore you're going to do this. Okay? And what you're actually saying is that the slope has changed this way. Now, the danger of it is you're doing it before it mathematically is there, but you might just be doing it on a different time frame, right? So let me show you that. Let's say now you're here. I don't know if this will work. Okay, here we go. So you would be measuring this. And you say, aha, I'm right. Well, that's your alpha. And by the way, do you see the January buy zone is right here? So whoever said Bitcoin doesn't trade technically, that's extremely technically right there. Okay. Now you're saying, well, it's also blowing the doors off of this. Yeah, I see that. But notice, like, that's the monthly buy zone. Here's the weekly buy zone and the target. So we blew through that. And then this down here, the January buy zone predicts this, which we got. But notice, again, that it stopped right on the monthly R2. And that's what this area tells us. Now, we've now since blown the doors off of this, right? But notice this is the weekly buy zone. So we have a monthly buy zone that produced. We had a weekly buy zone that produced. Then your re-entry was also a weekly buy zone, which produced. Look, we hit the weekly target. So if you were a buyer this week, you'd be buying it basically where we are now, which I've been showing you, and you'd be trying to step it up this way. Okay? So whoever said it's not trading technically, it's trading very technically. Okay? Boo, 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 boo. Yeah. MoveOn.com. All right, so that's that. Gold is the same as it's been. Oops. Just want to make sure we're here. Gold is still gold. Okay. Not very interesting. All right, next. All right, bang this out. Where are we? Still in the cycle. Notice here, there's my first sell, there's my second sell, and both of these are targeting, well, this targeted this, and that's why we had this highlighted, and then this is the M3 targeting that. Okay? Cool, right? So I'm going to let this run because I'm trying to show you like how price will behave once it's over. Okay? So there's only one sort of last hurrah plausibly plannable, and that would be this, but it's unpredictable. Okay. So just thinking a little bit more about the Bitcoin thing and standard deviations and all this kind of stuff. I want you to really truly understand that all that analysis doesn't make you a bull or a bear. That's not the point of analysis. And if you keep doing that, which I think you're doing, you're going to be inconsistent. So what I want you to first of all do is just be a bull or a bear on Bitcoin. That's that. And from there, it's much easier to determine what do you do when the let's say the slope and the standard deviation of the slope are pointing down and you're a bull. Well, at least you could say market conditions are not ideal for you as a bull. Doesn't mean you can't buy, but you think about it and you treat it differently. You set up your trades a little differently. You're just psychologically in tune that you have a little extra risk associated with what you're doing. But then you can drop to a smaller time frame and say, well, this looks really good here. These are very bullish areas, but I have to recognize that still on the daily, it's still very bearish. But on an hourly chart for today, if you're day trading, or this week, if you're swing trading, right? Or even on off the monthly pivot, you're like, dude, I got to take this off the monthly pivot, right? So you take these and then you manage the risk accordingly. But the thing is, your expectations are in line with reality. And then when you're a bull and it's sloping up, now you're super confident in what you're doing and you're still buying dips at support, but you're expecting 1,000% for sure higher highs, which is a lot different than logging in and every day trying to figure out, is it going to go up today or is it going to go down today, right? Whoa, 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 whoa. I'm trying to get you away from that. Okay? So, with that in mind, this has hit its target. This has hit its target. Okay? I probably should be out. The next thing is okay? And if you're looking at sort of this week and next month, there's a lot going on here. You might be thinking this, but that's a dangerous thought. If I was trying to trade this like perfectly, I would have exited here, okay? What I'm trying to show you is you can be in your trades more than 20 minutes, right? So whatever, like I'm trying to show you the entries. I'm not focusing on the exits and stuff like that, okay? But, you know, remember we predicted this move down while this was moving up. And the message I keep wanting you to remember is while this is going up, I kept telling you there's nothing on this chart that says down, but it's going to fall significantly back down. So that's what I want you to realize, all right? And then, so that's an opinion. Now, that could have been the dumbest opinion on the planet. And I have dumb opinions all the time. It's sort of like my hobby. But the thing is, if you use analysis to confirm or deny the dumb idea, even if you're only moderately correct for a short amount of time, you're probably going to make money or get yourself into what you think is an opportunity, remove the risk, and not be hurt, but you had the opportunity to make money. And that's what we want, right? I hope it's like, hey, thanks for the kiwis. Hey, not a problem. Not a problem. My pleasure. Now, there was a time when I was a real buyer of Kiwi Swissy, but obviously, as you can tell, nothing really worked out. But there was a time when New Zealand paid a high interest rate and Switzerland paid you money to borrow their cash. You're like, oh, you could double dip it. But of course, the Chinese economy collapsed, killing your Kiwi. Mm-hmm. Well, Max, we knew that because of the interest rate decision today, right? So the CPI, and then later on I guess it's coming up hot in 45 minutes or so. Right? So that's expected. All right. Boop, 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 boop. Okay, let's take a look out here. Check this out. You ready? Oops, delete. Up, 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 down, down, buy, up, 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 up. Hit the 200 and stopped. Interesting, huh? I don't remember doing this one, though. Why did we have that? I don't remember what we were doing here. It's a nice Fibonacci, though. I don't remember doing it, though. Oof, oof, look at that. Ciao. So you're supposed to be taking profit right here at 44.55. 144. Not like just if you're day trading and scalping and all that kind of stuff. I have the new version of this, but I haven't installed it. Is this beast? Yeah. Yeah, I'm just looking at, like, there's so many different methodologies you could use to trade this. It's just whatever you like. Even if you're a bear, there's clear opportunities. But notice that being a trend trader versus kind of making it up every day, there's always better chances. Here's the average price. These are deviations. And notice that with this setup, it's doing all of this for you automatically. So it's saying to you, the longer term slope or trend is here. You see that? And the shorter term trend is here. Okay? It's kind of cool, right? So based on this analysis here, let's do the middle one. I'll make it sort of purplish now. Based on this one here, price is just slightly above average, but not ridiculous, right? No, I don't play Fortnite. I play Far Cry. Yeah, absolutely. Not just Forex, Max, but every kind of trading. But that's what I love about being a trader, right? Yeah, you like Far Cry? Yeah. Yeah, you remember how dads used to take their sons out in the backyard and throw the baseball around? My son and I, we play video games together. He's like, Dad, you want to play Far Cry? Are you done your homework? Yeah, 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 yeah. Are you really? Well, I'm almost. All right, well, as soon as you're done, if it's not too late, we can play some Far Cry. Okay. Off to his room, busting out his homework. Yeah. It's just how the world is. The world's there's another another thing that hit me about 6 months ago about the world changed. I took my daughter's old bike. She outgrew it. And it was a beautiful bike, expensive bike, perfect mint condition. Never left the driveway, kind of thing, right? Never saw dirt. Beautiful, beautiful bike. I took it to the donation place where you donate it to charity. And they're like, we don't want this bike. I'm like, what do you mean you don't want this bike? I'm like, it's brand new. It's super expensive. They're like, kids don't ride bikes anymore. We just throw it in the garbage. If you leave it here, we'll just throw it in the garbage. Like, kids don't ride bikes? Nope. We'll just throw it in the garbage. Like, you're kidding me. Lim asks a great question. Lim says, Wayne, do you have any recommendations for getting objective news? Yes. Read the reports yourself. Meaning, go to the central bank or go to the government department that releases the data. So like the Bureau of Labor Statistics does the household survey and the establishment survey. Combined, they're known as non-farm payrolls. Okay, that kind of stuff. If you want to know about CPI, get it from the website. Actually read it. Right? Just read the data yourself. Don't watch TV. Don't read newspapers. I'm telling you, I used to get all newspapers. I used to have like 11 newspapers and magazine subscriptions, right? I had the Nikkei the Nikkei Daily, the Nikkei Weekly. I used to get the Nikkei Weekly flown in from Japan. It cost me like, I'm guessing, what was it? It was like $200, $300 a month to get this new newspaper flown in from Japan. And the funny thing is, I'd get like 3 of them in 1 week, and then nothing would happen for 3 or 4 weeks, and then 5 would show up. And it was I don't know why they couldn't just put it on the airplane. But anyways, I'd get them flown out from Japan. It's a newspaper focused on finance, but in English. Okay? So I used to read that. And then I signed up for the Financial Times and found out it was the American version of Financial Times. I'm like, well, they just copied the same crap from Wall Street Journal. There was like no difference. And then I got, what's the other one? The other finance one. What's the other one in the United States? So anyways, I tried to get the British version of Financial Times. Then I had the Wall Street Journal. Then I had, what's the other one in the United States? The one that focuses only on finance. But I found out that most of the time it was just ads. And anyway, so there were 3 American newspapers, and I found that all 3 American newspapers printed the same Reuters press releases and then filled it full of editorial and commentary, which I don't care about. I don't care about someone else's opinion. Not Forbes. No. It's a newspaper. I can't remember. It was pretty good. Investors Business Daily. Yeah, IBD. Investor Business Daily. So I got all of those, but then I found out they just printed the same press releases and then filled it full of commentary, and I don't care about commentary, right? But I also got import-export magazines. I still get like banking magazines and stuff like that, so I'm reading about all kinds of things, right? But I cut it down to like basically 0. So right now I get Barron's once a week, and I have an international banking magazine that I thumb through. Okay? Make sense? So I just read the reports myself. That's how you do it. That's how you get objective news. So for example, we had Canadian CPI today, but let's just do US. Okay? This is how you do it. BLS, Bureau of Labor Statistics.gov/CPI. It's beautiful. Look how beautiful this is, huh? Always comes out in the middle of the month, right around the 15th. Next one comes out February 13th. It's beautiful. Look at this. We know oil went from 50 to 65, right? Here it is. Take out oil, right? And you're like, uh-oh. So that, if to take out oil, you're basically doing core. Luis says he loves his Wall Street Journal. Yeah, if you pick one, then you're not reading the same. But it just bothered me, Luis, that all three just printed out press releases. So you could probably just subscribe to Reuters, right? But anyways, if you just have one, then you're not reading the same thing three times. Also, on many occasions, what was reported was straight up completely 100% wrong. Because I would do things like actually watch the press conferences. I'd actually read the reports, like, right? I'd be in the room when the news happened, and then the next day you read the newspaper, and you're like, "What the hell is this? That it didn't go down that way." So I dropped all of that. What do I think about Bloomberg? I like to have TV on in the background. Sometimes I'll play Bloomberg radio in my shower while I'm meditating, but it's nothing sort of influential. It's more like, so Bloomberg radio, I guess even like any of the TV programs, they're not really influential, but it kind of just gets my mind thinking about the markets as I'm waking up and stuff like that, right? But anyways, here's how you get impartial information. Okay? It talks about everything here, right? It's right there. Look, all items less the food and energy. This is core prices. Food prices can be volatile. Energy prices can be volatile, right? He breaks it all down. Not seasonally adjusted. Year in review, December to December, right? All items, CPI rose 2.3. You don't have to worry about chained and unchained and all this kind of stuff. Brief explanation of the CPI. The CPIs are based on prices of food, clothing, shelter, fuels, transportation, doctors and dentist services, drugs, and other goods and services that people buy for day-to-day living. Prices are collected each month in 75 urban areas across the country from 6,000 housing units. It was hardly anything, right? From 6,000 houses, they're going to predict the entire 380 million people are paying to live. Amazing, right? And 22,000 retail establishments, department stores, supermarkets, hospitals, filling stations, and other types of stores and services. Blah, 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 blah. It's wonderful, right? Like, why do you need a newspaper when you can just... Okay? You have all this information. Of course, you could read this very quickly, right? Over the last 12 months, all items index increased 2.3% before seasonal adjusted. The indices for gasoline, shelter, medical care all rose in December. Cost more to put gas in your car, cost more to live in a house, cost more to stay healthy than ever, right? The food index, blah, 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 blah. So anyways, look, here's all your numbers. This is what you need. Totally impartial. Do I meditate in the shower? Yeah. Do I like Sky News or other streams on YouTube? Sometimes if I, right? Got something else going on. Hope loves Tom Keem. Yeah, I haven't met, but the last time I did a show in New York, I was walking into the room with my entourage, and Tom Keene was up on stage surrounded by his people. He had just finished speaking, and I get up on stage, and he looks at me, and I look at him, and I'm like, hey, where do you plug in your laptop? And he's like, it's over there. I'm like, thanks, man. Did you know Tom Keene is like a giant? Leonardo, yeah. Well, I'll tell you the 2008 crisis, right? I had a son that couldn't walk on his own. He would stand next to the couch and he'd hold the couch and he'd walk around the house. Okay? And my wife then had our daughter. She's nursing straight out of the hospital. And I said, honey, the market's going to collapse. I want to sell the house. I want to sell our stock portfolio. And I want to move to the other side of the United States where housing prices are just a fraction of what they are here in California. Now, put yourself in my shoes. Convince your nursing wife with a toddler that's cruising. They call it cruising. So a little baby and a little toddler. And you convince your wife that you should sell everything you own and that she should leave all her friends, her entire support system, and move 3,000 miles away. And it's because you think the stock market and housing market's going to crash. But the stock market's at an all-time high, and people are becoming millionaires overnight flipping houses. And you say to her, not only do we need to do it, we need to do it right now as fast as we can. By the way, my wife is not an idiot. Okay? So here's what I actually did. I jumped on a plane, flew to Atlanta, bought a house. Then I went to the store, the furniture store. I walked in, woman comes up to me, hi, can I help you? I'm like, I have $25,000 and I have 5 rooms. Let's go. Bought a bunch of furniture, flew home, said, hey, told my wife, yeah, I bought a house. I furnished it. Let's go. Put our house on the market. Hired a moving truck. Sold our house in 6 hours for more than we asked for, all cash. Okay? Movers come in. They pack up all our crap in our house. A flatbed shows up, puts our car in the flatbed. We got on a plane. We fly to Georgia. Okay? Then the housing market collapsed about 6 weeks later. So I don't know if Peter Schiff predicted the stock market crash or real estate crash or not, but that's what I did. All in. All in. Not a little trade, the biggest trade I think you could possibly make. Okay? So that's interesting, right? Now, if you were in FX boot camp, oh my God, 15 years ago, I don't know, right before the crash. So it wasn't 15 years ago, 13 years ago. I did a big, long speech, and this was, everyone remembered this, but so much time has gone past, I don't know if anyone remembers it anymore. But I did, like every day I'd come in and we'd do technical setups. Back then, it was all day trading. That's all FX Bootcamp was. Every day, live for 3 hours a day, and then later on for 12 hours a day. This is day trading, day trading, day trading, day trading, day trading, right? And all of a sudden, I'm like, today, no technicals. I'm only going to go over fundamentals. And I'm going to tell you why you should, right? Fill your swimming pools full of oil, right? And stuff your closets full of gold. So this what must have been 15 years ago. And oil was something like $35 a barrel, and it went to 200. And gold went from 650. So I'll give you another example. So a couple months after that, gold was at 650, and then it was at like 800. And I went to a trading show, and I was doing a presentation in the booth for Interbank FX. Do you guys remember IBFX? And this is on the trade floor, the trade show floor. There's booths over here, booths over there, here a booth, there a booth, and IBFX had this big booth in the middle of the room, and it was about 8 booths big, okay? And in the middle of it, I had a bullhorn. A bullhorn! Roger that! That's right! Right? Boom! To the whole, right? I'm walking around. What a great memory, huh? With a bullhorn, telling people to buy gold. And of course it went to like 2,000, right? Amazing. So I don't know if Peter Schiff, I think he sells his books about the end of the world kind of stuff, but I don't know him personally. I've never spoke on a panel with him, but I see, it seems to be like, right? It seems to me that he's selling something with this, but I don't know. I'm trying to sell reality. I'm not trying to sell my opinion. I'm trying to sell the logic that I've taken to get to my opinion and explain it in such a way that you can do that and take care of yourself and your family and your loved ones. So I'm trying to remove the curtain and bring out the wizard. Okay? But those are like real things I did in my life. Okay? Kind of like yesterday saying, hey, if you're a bear, you want to sell in here, you're going to look for small reversal patterns on a 5-minute chart, either here or here. When you take it, you're going to sell it. Great. I very, very clearly outlined how to do it. And you remember the speech on this CAD yen where I said, look, you need to provide value to a customer. Okay? That was the preach there, right? And I said, if a client walked into your office and said, I want to hire you to sell the Canadian dollar, can you do that for me? And you're like, yes, I can. I can do that. But that's how you need to treat yourself. You are your client, and you're going to practice providing value, okay? So that one day, when it's necessary, you can do it, right? Why don't I sell a currency strength meter? I don't like them. Never did. Leonardo said, oh, how did I see it coming? Every day for about a year, I can't even remember what I call it, but at FX Bootcamp every Wednesday afternoon, I thought it was necessary for me to read from the newspapers. I'd make clippings from the newspapers. And every Wednesday we'd gather it. I can't remember what we called it. But anyways, instead of doing charts, all I did was read. It was basically a podcast before you ever heard of a podcast. And I would read from the newspapers that talked about how awesome and amazing everything was. And I would explain why it was wrong. And I knew every day, I said, look, not yet, but this economy is going to implode. But let me tell you why. And so I'd read, and the Wall Street Journal recorded all this. And I'd say, okay, but what's behind this? Or where are they wrong? Or what should we be looking for? Okay. And I did this almost for an entire year. Okay. Then I remember the moment, actually, like the exact moment, Leonardo. He says, how did you see it coming? Well, first of all, we're analysts of economic data, right? So it's all in the numbers. But then it gets all blurred with opinions and stuff like, oh my God, this is awesome. Everything's going to go up. Everything's going to go up. Well, you can start looking at it and say, well, there are some concerns here. It's just analysis of the numbers, right? So anyways, so for about a year, every day or every week, I'd do this meeting and I'd talk about why they were wrong. Then one day, the news comes out for real estate. And it was existing homes. And they said the average buyer, and it was really high, like 75%, maybe even higher than that. But let's say at least 75% of all homes sold that day or that month and when that report came out were to people that already owned more than one house. And I'm like, that's it. That's it. It's over. That is the end. Dumb money buying crappy houses for too much from other dumb money. It was suckers selling suckers, and then suckers selling other suckers, and suckers selling suckers that sell suckers. It's the same thing that happened in the dot-com days. When I was in the dot-com days, it was an entrepreneurial renaissance. And then all the idiots came in and ruined it, and like destroyed everything beautiful in this Garden of Eden called the Silicon Valley. And then pretty soon it was an idiot venture capitalist raising money from idiots. They would put it into this company, which they basically owned. And then that company would do business with this other company, which they had invested in and owned, which then did business with this company, which they had also invested in and owned. And then they wrote magazines that said, you should buy all these companies because they're changing the world and they're awesome. And so I'm like, well, if you just follow the money, it's this stupid company doing this stupid business with this stupid company, doing business with this stupid company, doing business with this stupid company, and then this magazine, which the venture capitalists own, say you should buy all these stupid companies. And I'm like, oh my God, and they're IPOing them. IPO. Like some of these companies were only like a year old. Boom. No money, no revenue, no real customers. Boom. IPO. Push it out. Let's rape and pillage the 401ks. Let's steal money from firemen and teachers is what was going on. Ruined it. So anyways, now instead of that going on, it was an idiot flipping houses to another idiot. And then you had poor people driving around Cadillac Escalades because they bought a house and then they pulled out any equity because it went up in value. It doubled in 6 months, and now they take it out. And now they buy Cadillac Escalades and big TVs and go on vacations. I'm like, oh my God. So when I got that, I dumped it. I dumped everything. Of course, I've done some analysis, but on that day, and I swear to you, that Wednesday, we got together for a weekly meeting at FX Bootcamp, and I said, that's it. I'm selling everything I own. Honestly, this was like, and the stock market was still going up and everything. I'm like, I'm out, man. I'm out. I'm getting out. Put it all on the line. Everything. Flew to Atlanta, bought a house. That was it. Came back, picked up my wife and our 2 tiny little babies. Boom. You cannot have a bigger trade than that emotionally. Okay. Oh, TBM, let's see. BLS. Forex factor calendar, effect on the currency. Well, I don't know why Forex factor says anything. Okay. Yeah, it's coming through TBM. All right. So that's that. Yeah. But if Peter Schiff says he saw the crash coming, yeah. What bugs me is when you see people on TV and they're like, that was totally unpredictable. You couldn't see it happening. I'll remind you what actually happened. When the market started to crash, Ben Bernanke, the head of the Federal Reserve Bank, said, oh, don't worry about it. It's just subprime. Jean-Claude Trichet at the ECB said, oh, we're going to raise interest rates. So they raised interest rates. I am not joking. And then the Bank of England said, oh, that's just a problem for the Yanks. I was there, guys. Every second of every day. Ben Bernanke said, don't worry about it. It's just subprime. Bank of England said it's just a problem with the Yanks. The ECB actually raised interest rates. I'll tell you how close, like the reason I moved so quickly, like drop everything, we got to get the hell out. I'll tell you how quickly things actually happen. The ECB raised interest rates during their normal meeting. And people are like, well, it seems like there's some volatility going on in the Forex market and in the bond market. Okay? And he's like, so they raise interest rates. 3 weeks later, there's no meeting planned, right? No meeting planned. The ECB had just raised interest rates by 25 basis points. All of a sudden, there's no meeting announced. There's just all of a sudden, ECB cuts interest rates by 50 basis points. What? They just raised it like 21 days earlier. And all of a sudden, they're like, oh my God, cut. That's how fast it happened. That's how fast it happened. I was already free as a bird. Free as a bird. Okay? So I built a golf course in my backyard. Yeah, we brought out bobcats. I can't remember how many tons of pea gravel. And I bought real flags and stuff like that. And it was really cool. It was fun. It was like lawn darts for rich people, right? So I built this 2 holes. They're about 120 yards apart on a slope. So one shot you have to hit uphill, the other shot you have to hit downhill, which is quite tricky. And the reason I use pea gravel for the green is you could get out on my course, and so I had these like wedges. I had a bunch of wedges, and we had hundreds of golf balls. Every time you go to like a garage sale, we'd always look for golf balls, right? So anyways, so people would come over, and we'd take out a bunch of wedges, just like lawn darts. You can hit the ball as hard as you could with this wedge, and go way up. And then it come down, and if you hit the green, like the pea gravel, it just go bonk. It just stick into the pea gravel. Like, oh, nice shot, Bubba. Your turn. Right. And it was all paid for by the Japanese yen. Free as a bird. People were dying in the streets. People were losing their houses, they're losing their jobs, going bankrupt. It was horrible. I built a golf course in my backyard. It was awesome. I bought an $85,000 Mercedes convertible for $27,000 in cash. And the guy thanked me. I saved his house because I bought that car from him. Thank you. He's like, thank you. I've had 5 people over here to buy this car, but they couldn't get a loan. I'm like, a loan? Cash. Pah. Save you. I save you. He was so happy. And planning ahead, guys. Planning ahead. That's all it was. But what really got me upset is when the experts managing billions of dollars in people's retirement accounts, they're like, you couldn't have predicted this. What do you mean you couldn't predict this? That's your freaking job. I would be so mad. Right? I used to get so mad. Hang on, I'm seeing if I have a file on this machine. I don't think I do. No, I have an old interview I did for a radio station. And you could just hear how angry I was at people at the market. So anyways, that's that. So anyways, there's the story of my life. Written on these walls are the stories that I can't explain. All right, so we got that. Okay. Ahmed Bell, you should have seen. This guy lived in a palace. Circular driveway, right? Front door, twice the size of a normal door. You walk in. I used his restroom while I was there buying his car, and the ceiling in his bathroom was like 13 feet high. Like, this guy lived in marble, everything, 5-car garage, right? And he was shaking. Like, he was almost in tears that I'm saving his house. I'm saving the embarrassment for him and his wife and his. Could you imagine saying, honey, I've lost the house, I've lost the business, I've lost everything. We have to leave. We need to go find a small apartment somewhere. Like, dude, this guy and I saved him. Yes. So imagine those times, guys. Like, people were in tears. Okay? I saved his house. And no, it wasn't priced at 85 and I drove it down to 25 and all this. No. He was asking, I think I paid him full price for what he was asking. People couldn't get a car loan. So he just lowered the price, just happened to be available. I was looking for Porsches. This Mercedes came up, and I saved his house, and he was so happy. It was just money. Thank you, Forex, right? Yeah, maybe. So anyways, but this is, I don't don't get me wrong. Don't think of it as bragging or something. I get this a lot. I'm not bragging. I'm telling you, this is your job. If you can't do that, then you're not a trader. Like, this is what we do. Someday you will have to save somebody's net worth. And they pay you a lot of money to do it. Remember, every idiot right now looks good because they're buying the stock market and goes up. And there are tons of idiots. Okay? But in the last 5 years, 4,000 hedge funds went out of business because they suck. Okay? Now, when the stock market does have a serious decline, how many more hedge funds in the United States are going to go out of business? Another 4,000? This is your future competitors that are going to leave a vacuum for you. Okay? 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 Think of it, right, Max? But that's what it's all about. So I don't know when you're going to peak, but your real opportunities in the future are going to be during these declining moments. Okay? Imagine someone is invested with one of these loser hedge funds and the market comes down. And then they look at you and your track record and you're like, well, for the last 5 years, I've just been steadily producing. There's no home runs in my portfolio. As you can see, I was never over leveraged. I was never guessing. I was never betting. I was never all in on one idea. I simply can produce with very low volatility a steady stream of income by taking very little risk and then managing that risk very, very well. However, when the market crashed, what happened to everyone that was making 30% a month? Well, then they're losing 90% the next month. Look what happened with my portfolio during this crisis period. 2% a month, 4% a month, 3% that month, 8% this month, 3% that month. Low volatility, consistent returns, managed risk. And they say, oh my God, oh, if I needed you a year ago. You say, don't worry about it, because these down cycles happen. They happen frequently. I will be there for you now and in the future, and I'll make sure you will never experience that horrible decline in your net worth ever again, because I don't gamble your money. Right? That's where I want, that's the vacuum that's going to happen. The money needs to go somewhere, guys. Okay? The money needs to go somewhere. When those hedge funds fold, they're going to need you. Okay? And you might not be ready for the financial crisis that's coming. Okay? If Trump loses, the financial crisis is going to hit soon. If Trump wins, it's going to be delayed a year or so, and then it's going to come down. But there will be a decline. Okay? And you can analyze this. Same thing when it comes to, someone asked for pound kiwi. I don't even have a pound kiwi. I'll have to figure this out. Hang on. But the real estate market is involved. The financial markets are involved. Anyways, they're all going to be there. The part that bothers me is, and in fact, I was talking to my wife about it this morning. Like, I just don't get it. We're at full employment in the United States. U.S. corporations are profitable. Banks have never made this much money before. Did you hear that at the beginning of earnings season? Bank of America, JP Morgan, and a few others. They've never made this much money before. They've never made this much money before. It's like raining out of the sky profits. And the Fed is in an economy, is making money cheap and easy. Why is the Fed stimulating the economy? Right? That's the scary part. Okay, so pound, what was it? Pound kiwi? Who trades pound kiwi? Well, anyways, let's look at this. Pound is stronger than dollar, US dollar. Pound is stronger than Aussie dollar. Pound is stronger than Norway. Na krona. Pound is stronger than Swissy. Pound is stronger than yen. Pound is stronger than euro. Okay? But this is a top. That's a top. That might be a top. That's definitely a bottom. So be careful. You should be worried about tomorrow, not today. Written on these walls are the stories that I can't explain. Leave my heart open, remains here empty in its cage. She told me in the morning she don't feel the same about me in her clothes. Seems to me that when I die, I want to be wearing pantyhose. All right. What does this tell you, by the way, when you look at this? It's not supposed to go much lower. NP says personal debt crisis coming. Yeah, I guess I'd have to look at that. I don't know anybody with debt. That's the issue. So you always have to take yourself out and I have to read about it. One of my favorite memories of taking classes at Harvard is they spent 2 hours, I think, in one of my classes teaching me what it's like to be a poor person. I couldn't believe it. I thought it was the funniest thing ever. And I mentioned it to the professor. I'm like, you got to just see the humor in this. And she's like, what do you mean? I'm like, I'm at Harvard and you're teaching me what life is like for a regular person. It's funny. And she still didn't get it. I don't get it. I'm not joking. We watched a 2-hour documentary about what life is like. Yeah. She was a single, the story was about it was a real documentary about a single mother, lived in a trailer. She was worked at a nursing home as a nurse, worked really hard, didn't make much money, had difficult time taking care of the kids. There we go. all this kind of stuff, and she had to use different government programs, and she tried to go to college, but it was very difficult raising a kid and working, and it was just like, you're kidding me, right? Like, all right, so we got a week of kitty cat. They didn't cut though, did they? Seems quite doubtful they would cut, but maybe they did. And I'll be gone, gone tonight. Yeah, no cut. Didn't think so. Da dee da da. Da 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 da. 84.42 was the sell. The target for that sell is 83.67. So you might as well say 50. 50 is 83. That's the S2. Okay, I gotta move. Give me the juice. I gotta move. I gotta move. Give me the juice. Okay, not a lot going on in here. Very noisy, except this part, I guess, but I feel like I'm backfilling a bit. Yeah. The only thing you could really try to do is just measure the whole thing. We were at the average price when it occurred, so, you know, generally down, but generally not interesting. CAD yen, great. Aussie CAD, that moved. Can we do a scalp set? I don't like scalping news. Even though I do non-farm payrolls, I'm clear about it. I'm like, it's not a consistent way to trade. So what I like to do if I'm scalping is I'll do something like there is no scalp in here. I guess you could do it this way. I like to do things like, let's see if I can find something that I would scalp. Probably none of these. Let me pick like, let me isolate Aussie. Because we have Aussie jobs today. None of these are very good either. None of these are good. All right, maybe I'll just have to draw it. What I'll do, what I prefer to do, let's go blank here. All right, let's suppose I see a 4-hour 21 that looks like this. Okay. And then I'm on a 5-minute chart and I see this. Okay? What I like to do in this scenario is scalp to the downside. That would be a classic me. Okay? It's, you know, it's there, it's slow, it's patient. So the news has come out and you have this, and then you lose the volume and volatility, and then all of a sudden it goes, This one here, let's say, is more predictable than this. Okay, my scalp, I'm lining up a 4-hour chart with a 5-minute chart, or even a 15-minute if you want. Okay, but what I'm thinking is, as this is going up, somewhere in this zone, I believe it's going to resume trend, right? The shorter term chart will resume direction of the long-term trend. And I will look for scalping opportunities in this zone. Okay? And I'll look for things like up, and then all of a sudden you get this boom, boom, boom. And it might be on a 5-minute chart, but I'm here and I'm aggressively now scalping this way. I might sell here, I might sell here, I might sell here, but I'm doing it in this zone and because of this direction. The market's response to the Bank of Canada not cutting or raising interest rates is just volatility, but it's not trend, and it's not fundamentals per se. Mostly this is people getting out of positions that they were already in, but I don't necessarily like it. It's not necessarily the opportunity for me to invest in, right? Like, remember, I'm not trying to trade, I'm trying to profit. Okay? I'm trying to produce consistent returns with low volatility. Does a news release provide low volatility or high volatility? Right? Come on, guys. Does news scalping create high volatility or low volatility? Right. But I've already stated, right? I want low volatility, low risk, and steady or consistent returns, right? And I'm looking for like 3 to 6% a month. But I'm telling you guys, if you did on a monthly basis, like let's say this is your 2020. And there's a, you know what, let me just blank this out again. Delete, delete. Oh, template, blank, blank. All right, let's do it this way. Here's your 2020 results, let's say. January, February, March, April, May, June, July, August, September, October, November, December. Just barely squeezed it in. Okay? And you show this. Okay? What does this make you? You earn 2% a month, month after 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 month. I'll tell you what that makes you. Okay? If you go to Barclays, I don't know how to spell Barclays. Hang on. Oops, I didn't want to do that. Did I delete it? Oh, I deleted it. What that makes you, let me just pull up the website. Oh, it's a C, obviously. Barclays. No wonder it looked wrong. If you go to Barclays Hedge.com, okay, they manage an index of professional traders like you and me. Okay? Just like you and me. You can look at their database of commodity trading advisors. Commodity trading advisors are simply like Forex money managers. There's different terminology depending on who regulates you, but these are funds that are regulated by the National Futures Association. Okay? So it's not SEC hedge funds. They're basically hedge funds, but you're trading futures or Forex. Now, there's different strategies. You might be like energy only. You might be grains only, or softs, or whatever, right? Coffees and sugars. Or you might do S&P 500 and 10-year T-note and all this kind of stuff, right? Financial derivatives. Or you could be a global macro foreign exchange trader. And it compares trader versus trader versus trader. And you can mix them all up. And you can look at these things, right? So that you can be listed on this database, or you can buy the database and you can do some comparisons, right? I don't think they'll let you do this. So I used to analyze this all the time. It costs money. It costs $5,000 or something, right? Yeah, there it is. So I used to look at this all the time. So anyways, what I'm trying to tell you, if you look at Forex money managers licensed and registered in the United States by the National Futures Association, this is what you will find. If you do 2% and then 2% and then 2% and then 2%, right? January, February, March, April, May, June, July, August, September, October, November, December. 2, 2, 2, 2, 2, 2. Now, the reason I bring this up is a lot of you guys are trying for this per month. Okay? If you do 2%, you will be the #1 professional foreign exchange trader in the United States. What kind of volatility would you have? 0. And Ron says 24% for the year. No, it's compounded. It's more than that. Okay? It's more than that. Okay? But most importantly is you will be the #1 fund, the #1 global macro foreign exchange fund in the United States of America. Barry's like, aha! Right? No, Barry, I did not. Cool though, right? Like, I'm trying to give you the perspective. Now, imagine you went to a professional investor and showed that 1 month you were up 26%, and then you were down -18, and then you were up +5, and then you were down -12, and then you were up +33, and your results look like this. And they're like, I don't know what's going to happen next if I give you money. I just don't know, like, if I'm up 26%, should I just cash out of your whole fund and run away? But what if I give it to you and you're then -13? You're like, or -18? Like, I don't know what's going to happen if I give you money. Do wealthy, sophisticated institutional investors hand out millions of dollars and not have any clue what's going to happen with it? Okay? They look at you like any other deal. Okay. $9.5 million purchase price, of which $2 million is in cash. Cash. Right? 7.5 million in loan. Okay? And then you can do, and then financing costs and all that kind of stuff. But with rent that equals, and the cost of the loan equals, and when it's all done and other expenses, your net operating income is this. And then you can say, and the market grows at 5% a year. So in 10 years, this $9.5 million property is going to be worth 12.2. Okay. Meanwhile, the net operating income is higher than the expenses, and what's left over covers the cost of the loan, plus puts a certain X number of dollars in your pocket per month, which then offsets your original cash that you put in here. And at the end of the period, you expect to make your, this plus this and whatever, and then you got your closing costs and stuff. And they can pump it out and say 2.73 M in 5 years. Or they can give you 9.5 million. Oops, not percent. They can give you 9.5 M. And by analyzing what you do, they have no idea what's going to happen. Which one do they do? Actually, Javier, you're right. The way that Barclays Hedge does this is 100 M, right? And above, or 100 M below. If you don't have 100 million, you're a peon. Yeah, peon. Everyone's got more than that. I mean, that is terribly small. But Forex funds are a little bit different, of course, than many other funds because you have leverage and all that kind of stuff. But what I'm saying is you need to build up and scale. So at first you're going to trade money from friends, families, and fools. And you're going to do that for a couple of years. And then you'll meet some people and you'll do some presentations and friends of friends, maybe your doctor, maybe your accountant. Okay? I have lots of stories of raising money from people. And you just start building your network. And then you're pitching groups and all this kind of stuff. And what'll happen is you'll move up this ladder, and the more sophisticated investors will need a little more and a little more and a little more. And by a little more, I don't mean return. What I mean is due diligence. And no one's going to give you $10 million in cash if you have $28,000 in your account. Agreed? Especially a sophisticated investor, they'll have a mandate where they cannot be more than, let's say, 10% of your fund. So if they're if you have $1 million, the most they can invest is 100,000, but they might have a minimum threshold of 10 million. They're like, so come to us when you have 100 M, but we're interested. Okay. Barry's like, what's not operating income? What's NOI? NOI is the basically you take your outflows and your inflows of cash from your investments, and what's left over is your NOI. So an apartment, okay, and an apartment building has expenses. So electricity, mowers, insurance. Okay, but it pays you rent. So the renters should be paying for this, and your rent should be able to cover all of this plus some leftover, right? That's your net operating income. So you collect a 1 million in rent per month, right? And your expenses are 100,000. This is probably off. Let's call this 300K. So your net operating income would be 200. Okay. Let's say on an annual basis. This would make more sense for most people, right? So if you own this building, okay, if you own this building, you'll make $200,000 a year. You will collect $300,000 in rent and pay $100,000 in expenses. So your net operating income is 200K. But now you got a loan. So now loans, okay, might be $175,000 a year, right? If you're leveraged to the hilt. That comes after NOI, okay? And now you're only making 25K a month, or sorry, a year, okay? But the cool thing is the value of the property is going up 5% a year, right? So your big payoff is going to be at the end of the month because you're not happy only making 2K a month, but after 10 years you sell it and all that kind of stuff. So right, so the loan is calculated after the NOI. So that's what I'm saying. So NOI is income minus expenses, gets you a net, right? And then the cost of financing is different because let's say you have a smaller loan, you put twice as much cash down. Okay. Now your percentage return is lower because you have less leverage, but you'll make more money. Okay. But anyways, now it's just finance. So this is not a finance class, but I certainly can do it for you. So anyways, I feel like we've gone too long today. I don't even know. 2.5 hours is a pretty long webinar, huh? Well, thank you for being on my team. Thanks for being here. I hope it was worth your time. I hope you learned something new. Javier says, surely as a startup hedge fund, one should target ultra high net worth individuals. Well, yes, but first you need the track record, right? You need to show that you've been able to manage other people's money and provide the consistent return with low volatility. Okay? And your account, your assets under management might be low, but this is a long game, right, Javier? But of course, if you know people that are wealthy, those are going to be part of your friend, family, and fools. So like if your dad's buddy gives you 300K to start with, because that's play money for him, you're off to a better start than someone that is got 3,000 or 30,000. But you got to start with what you start. But what I said is the profits, or what you pay for, so what you earn, right, is a function of your assets under management that you start with times time. Well, it's not times, is it? It's a function. And delete. Okay. AUM time. Okay. So if you start with 300K and someone else starts with 30K, you're going to earn more money. But the trading should be exactly the same. Okay? Now, it's going to be difficult if you don't know rich people and you don't know how to talk to a rich person. You're going to need to be trained. That's it. But that can be fixed. Okay? The chilled fork is for your salad. Right? Anyways. Peace on earth. May the pips be with you. May our profits be above average. I'll be here tomorrow. I hope to see you as well. And I'll create a survey. I'll try to, and I'll send it out to you because I'd like to know what you need for me to become a successful